back over with the weekend video clip, and it's Saturday the 8th of June. Starting with gold this morning. Gold has continued to behave as I've been expecting. Essentially, we've seen the first move up, which I'm not showing in total, but it's came from quite a lot lower down. Then we've seen a wave 2 in the shape of a rather messy falling diagonal, and we're now seeing a clear 1, 2, 3. The 4 may not be over yet. I mean, we may still be in 3 in fact, but that could be a 4, I guess, with the final 5th wave coming in. We've got resistance of 1350 up to about around 1370. So even if this wave 1 off this major low here doesn't take out those levels, once it's seen the correction, the wave 3 certainly should do. So I'm expecting a pullback fairly soon. Once that pullback is over, and it shouldn't take too long. I mean, this particular move came in towards the end of May. It's about 2 weeks old thereabouts. So 2 weeks upside, maybe a week's downside, and we could see a third wave coming in. So certainly in June, I'd expect to see a very decent rally starting up, taking us above this major resistance. I'll just show you the chart actually. These are daily bars. So we saw the low back in last year in August. So we had this big 5-wave advance. We have the 2 wave, and now we're on our way up for the next. Well, I think this will be the first major bull market in gold for some time. I'll go back a bit further as well. This is a 5-year chart. So you can see the major resistance around 1366 thereabouts. So we're pretty close now, 1347, just $20 adrift. We can expect some turning and throwing. This has been in place for these highs of 2016. This was 2018. So it's been a long, drawn-out process, but this is looking very positive now with a major advance in gold expected. Right, next to the Dow, we had this, what I was calling a 5th wave failure, in terms of it didn't look like the end of 5 waves up, as it was. It didn't take out the previous high, although it was fairly close. From there, we've seen what is now an ABC, A, B, C. It's looking impulsive, looking like it should go further, but very solid bounce here. There's a rumour that the US employs something called a Plunge Protection Team. I think I've got that the right terminology. It may be more than a rumour. Who go in to avoid calamitous collapses in the stock market. Now, if you think about Trump and the fact that he wants to be re-elected next year, and he feels that the stock market will play a big role in that. You think about the amount of value of being present in the US compared to the amount of money it would take to actually just prop up the market for a while. It depends on what's happening, of course. And of course, you can use interest rates mechanism. If you're in that position, you can get the Fed to start easing as they are doing, of course. You can also control what is flowing through the news to an extent. For example, the trade war with China, this kind of stuff can be manipulated to suit your purposes. So I think all this stuff may well have come in here to create the rally we've seen here, which is a very, very substantial bounce up against a backdrop of some pretty bad news with this trade war, and trade wars often end up as shooting wars at some point in the future, not yet, but there's quite a lot of tension in the world, I think. I mean, the dominant power has been the US since it took over from the UK between the First and Second World Wars. You now got Russia, China with their stalking horse of North Korea, who rather would like to change things, I suspect. And I think those tensions are not going to go away, and they're only going to accelerate as we go forwards. So I think a very unsettled world at the moment. America is seems to be at war with various nations at the moment. Quite why is not always clear. Some people call the US a terrorist state, I think with some good reason, really. I mean, the whole war with Vietnam is perhaps a reasonable example of that sort of thinking, I think. Anyway, this is looking pretty solid. No clear wave, kind of got acceleration here again. So it looks like we're heading for new highs again, or at least an attempt at new highs again. And I'm monitoring this quite carefully. There's no obvious wave count. I'll check the wave count first. I mean, there does seem to be a case for a 1, 2 to there. You've got 5 waves up to there, certainly. So another small 4. But this here looks like acceleration as well, so I mean it could be a blow off top, I guess. But there's no real reason to think this is over just yet. Right, the actual peak came in at 26939, so yet again less than 1,000 points away from another all-time high. I would have to say that's odds on favourite at the moment. The DAX remains a lot lower than the all-time high. Possible 5 was up here again, so a correction looks due, but we are living in times when news is more relevant and money flow, and I mean we have got an inverted yield curve, I believe. Certainly long-term rates are going down, money is flowing into government bonds, which is a sign of adverse risk in the world at large. There is a lot happening right now which is quite hard to make much sense of, and certainly even harder to resolve exactly how it might all turn out, which is pretty much an impossible task. One can only take one's trades, control one's risk, and enjoy or suffer the outcome. Right, Bitcoin, we have the 5-wave advance, 1, 2, 3, triangular 4, following the theory of alternation, and then a 5th wave to there. It is possible that the 4 is actually coming in now, and the 5 will be a little bit down in the future. Remains to be seen, but for now the wave count looks pretty good for reasons I'll explain in a minute. So the obvious retracement levels is around 50% at 5.4, and the 61.8% level around just below 6.2, which is the key points at the moment. So I'm being a bit confused by the fib chart here. 50% level is there in fact, and the Fibonacci 61% is there. I believe of course there's 4th wave support here as well. So 6.1 to about 6,000 to 7,000 is a strong support level. It goes down to here, it's still a bit more severe, but that's a 61.8% level, I believe. So those levels perhaps to watch. Let's have a look at the shorter term action. Right, this is a bit clearer, I think. The problem with using this lettering is that it's all well and good on the chart you do it on, but once you actually expand your chart over longer time frames, it all starts getting jumbled around. Anyway, we've got the 4 wave there, 4-wave triangle, the 5th wave to here, which if you count from the C, which I'm not sure you should do technically, but does count as a 5-wave advance. 1, 2, 3, 4, 5. Since you've seen that peak, we've got an A, B, C. Now that's a corrective formation, so that suggests we're seeing a correction. Furthermore, this ABC here, which is also pretty dithery, you notice, has taken out the low of what I'm calling A, which means we can't be seeing we can't be seeing a 4-wave correction. It's too big in any case, but a 4th wave should not overlap with a wave 1. So again, that suggests it's a corrected move. The fact this is also dithery suggests it's not over yet. We're seeing a B wave. We're not seeing new impulsive action. Now this may go a little bit higher, but maybe not too much higher. It's as I say, it's not particularly strong, obviously. So I think we're seeing another leg down. This leg here, from around 9.1 down to 7.4, 1,700 points. That takes down to about 6.2. So I'm looking for a move down to there at the moment, really. Maybe this is going to go higher first, so that would actually increase the target here. But that's the kind of thing I'm looking for as a big ABC, and we've got the support level down here, based on the low of the triangle. It's around 6.6. So that would be a sort of fairly ideal scenario with support around the 6.6 level. No doubt there'll be screens of crashes and Bitcoin is dead, etc., etc. But this is business as usual. This is what markets do. This is one of the things I like about Elliott. It does teach you to look out for this kind of action. You're expecting to see normative corrections, and you don't become hysterical when you see them, because you know that's what happens with markets. And of course they get over exuberant at tops. Too many people get involved. They fall back very sharply. Similarly, they get very depressed and miserable at lows. A lot of fear around, and that's the best time to buy, obviously. I should mention we have a very active chat room on Bitcoin, which is part of the Technical Trader Services, and I think it's a very valuable resource. In fact, we're going to see once this correction's over, we could see a very startling rally up. It could surprise a lot of people. I think 20,000 is certainly one possible target for this rally. In fact, I'd be quite surprised if it doesn't take out 20,000. Also, Uhura is now looking for more recruits. If you're interested in cryptocurrency and want to get involved and to take advantage of this rally, then the Uhura service is good value and has had very good performance to date, up about, I think, 60% at its peak over 6 months, and I'm expecting that to be a much greater return going forwards. So please just drop me an email. The email link is either in the email or it's on the YouTube channel. We also have a very active shorter-term traders group. I'm not myself a short-term trader these days, but if you are a short-term trader, this is particularly there's some very talented people in that group who are very happy to help. Anyway, on that note, I'll call it a day. I found it interesting and useful. Back to report on Tuesday morning for subscribers. Have a great weekend. Thanks for listening, and bye for now.